It's important to remember that even with the sharp correction we saw, silver is still up between 65 and 70% this year. And I mean, I don't know how many assets rank higher than that. But when you have any asset that appreciates in a parabolic manner 40% in 2 months, a correction is inevitable. This is what overbought is. And, it shouldn't come as a surprise to people. And I think that certainly is something that's hard to rationalize for us gold and silver bugs, because we've waited so long and feel that the market should have done this a long time ago, gotten to these levels. But suffice it to say, this is a very high stakes game where some of the biggest institutions on the planet got caught very much offside and were, actually looking at what could ultimately be a existential threat to their survival. And so they did an awful lot to slow down the rise. But here we are again, back up over $1 plus and back up over 50. And maybe it's because silver is now a critical mineral. We've been talking about that for a long time now. Now it's official. Maybe it's the realization that it's irreplaceable, that it's the most conductive element known to science, the lifeblood of energy and data and power itself. Who knows? But the bottom line is that with the U.S. government calling it a strategic mineral, they've put a floor under the price, and they will, I think, start to purchase it. At the same time, you have the Chinese Ministry of Commerce. Their name is... The acronym is MOFCOM, Chinese Ministry of Commerce, has new rules regarding the state-traded exports of a few different commodities, including silver. So they are doing the same thing. They aim to step up, if you will, the protection of resources, and that means curtailing exports in 2026. When you realize that the largest refiner of silver in the world, China, is restricting exports and has announced starting in 2026, all silver exports will require individual government licenses from Beijing. To me, this move classifies silver as a resource of national interest, not just to the United States, but signaling a strategic shift towards state-managed supply, including places like China. It's a big deal. It's a very, very big deal. And I think the bottom line is silver is being redefined from an industrial metal into a geopolitical resource or into a strategic element, not just in the United States.
How does that change the game for major dealers like Miles Franklin or smaller dealers at the local level?
It will consolidate into more major dealers, or those smaller dealers would consolidate, in my opinion, because the cost of maintaining an inventory is becoming exponentially more expensive. And with that, you have insurance and shipping and all of the things involved. It's expensive. It's much more expensive than it was. To hedge a position at higher levels, takes away some of that risk. But most of the smaller coin companies or local coin shops don't hedge their exposure. So, it's a big deal. You have a large inventory of silver, and the volatility that we've seen where it can fall, 15, 20% in a short period of time. That's enough to really scare a lot of these coin shops out of business. I think it's an interesting thought experiment, but my guess is the higher the price of metals go. I mean, look at gold. A tube of gold eagles now is well north of $80,000. And so how much gold can you really have as a local coin shop, not only from a standpoint of maintaining an inventory, you better have millions of dollars to use, but insurance and shipping and all of that stuff, it's becoming a lot harder. When gold was $1,000 an ounce, I remember my father-in-law sending me a text message, "Congratulations, silver gold's finally over $1,000." Well, back then, it wasn't too long ago, a tube of gold eagles is just over $20,000.
As the price goes up, how does that impact the realistic challenges that they'll be facing with shipping valuation limits and things like that?
It's real. I mean, we probably do as much shipping as anyone in the United States on a, that's not a fair statement. Our shipping with Federal Express is as robust as it can be without being someone like Amazon. And so we get all of the discounts that you would get and have all of the insurance that you could get. And, we still don't put more than $150,000 of product in a particular package. You try to ship it by registered mail, the most they'll give you is 50,000. So if you can only do 50,000 by registered mail, you're not even doing a tube of Gold Eagles. And, that's challenging. The cost is getting more expensive. You look at companies like FedEx, their costs are going up. It's tough. So prices will go up. Insurance will go up. It's real for sure. So again, this further would, I think, push towards consolidation into the larger companies who have the wherewithal to do it. That's not great for the consumer, but it's just the reality of the cost of doing business, and it's increasing dramatically. If it continues down this path, yeah, it would be very interesting if you saw triple-digit silver, where you're talking $50,000 for a monster box. Yeah, it's getting tough, but triple-digit silver really isn't that crazy anymore. Keith Neumeyer was the first one to talk about it, and when you look at the fundamentals behind it, it's not that outlandish to say that.
It's important to remember, friends, that even with the pullback we've just seen, silver is still up between 65% and 70% this year. Think about that. In a world where the S&P can barely tread water and bond markets are collapsing under their own weight, silver is one of the best performing assets on the planet. That kind of move puts it in rare company. But the thing about parabolic moves, especially in a market this small, is that corrections are inevitable. This is what overbought looks like. It's not a signal that the bull run is over. It's the market catching its breath after sprinting. Now, I know that's hard to stomach if you've been holding silver for years, maybe decades, watching it get suppressed, watching Wall Street dismiss it as some relic or industrial sideshow. I get it. You've waited a long time for this. You've watched price manipulation, paper dumps, fake supply data, and endless excuses. So when we finally get a run like this, and then a sharp correction, it feels unfair. But this is how parabolic markets behave. The people on the other side of this, those large institutions that have been massively short silver for years, just faced an existential threat. You think they're going to go quietly? Of course not. They're fighting for survival. The difference this time, though, is that the fundamentals are now on our side. We're not just talking about investment demand anymore. We're talking about governments, major governments, finally admitting what we've been saying for years. Silver is critical. Not just useful, not just industrial, critical. It's now officially a strategic mineral in the United States. That's not conspiracy talk. That's policy. The same government that spent decades ignoring or suppressing silver is now calling it essential for national security. Think about what that means. For decades, gold got all the attention as the monetary metal. But silver, it's the lifeblood of energy, data, and power. The most conductive element known to science. You can't build a solar panel without it. You can't make an electric vehicle function efficiently without it. You can't build 5G or AI chips without it. It's the bloodstream of the green energy transition. And now it's been reclassified as a critical mineral by the US government. That's like the referee finally acknowledging that the game has been rigged and flipping the scoreboard in your favor. When the government declares a metal strategic, they're not doing it for fun. They're preparing to secure supply. That means purchasing, stockpiling, and yes, protecting it from export. And they're not the only ones doing it. China's Ministry of Commerce, known as MOFCOM, recently announced sweeping new rules for the export of key commodities. Including silver starting in 2026, all silver exports from China will require individual government licenses from Beijing. That's right. The world's largest silver refiner just said, "You don't get our metal unless we say so." You don't need a PhD in economics to understand what that means. They're hoarding it. They're not doing that because silver is just another commodity. They're doing it because it's a strategic resource. It's the same playbook China used with rare earth elements years ago. First, they dominated refining capacity. Then, when the world became dependent, they locked down exports. It's resource nationalism 101. So now we have the two largest economies in the world, the United States and China, both treating silver as a critical asset. You think that's a coincidence? It's not. It's the recognition of a simple truth. Whoever controls silver controls the energy transition. It's that important. This changes the entire game for everyone. from miners to investors to dealers like us at Miles Franklin. The supply chain is becoming politicized. Access is becoming a privilege, not a guarantee. And as these export restrictions and government stockpiles ramp up, the available free float of silver, the stuff you and I can actually buy, is going to shrink dramatically.
Junk silver's not. It's not. It's dimes, quarters, and half dollars minted prior to 65. But where I say it's the best value, if you can do anything at or near spot, which junk silver is, or maybe a little over, but not much, you're buying something that is the best value with no opportunity cost, with no added premium attached. And you put that in reference or measure it against where it's been in the past. During the pandemic, because of its utility and its divisibility, the premiums were second only to American Eagles. And the U.S. Mint has been the model of inefficiency for a long time. And, I asked people to listen to Vic Swear's interview with, what's Jack's last name? I forgot Jack's last name. It'll come to me in a moment. But Jack Sermon developed the Silver Eagle program at the U.S. Mint, and Bix did a 3-part interview with him a couple of years ago. I remember almost falling off my chair, where he said he was approached by, at the time, his boss, which would have been the Secretary of Treasury, Janet Yellen, who told him to make as few Silver Eagles as possible without creating a global backlash. I mean, he actually said that the primary distributors came to him with far more demand than they could fill, like they wanted another 36 million and they gave him 12. And he said it really bothered him. So, there's a fine line between conspiracy and reality with the U.S. Mint. I would prefer Silver Eagles all day long, with many of these states looking at silver coins made in the U.S. as legal tender. But the premiums on Silver Eagles, on gold buffaloes, are crazy right now. And moving in that direction again, the fact that junk silver hasn't followed it the way that it did during the pandemic is testament to the fact that things aren't breaking apart for everyone to notice. This is just those who follow the U.S. Mint and their lack of capacity. But if I were going to say what is normally, I would say bars. But due to the threats all along this year of tariffs, the bar industry, or the products that are associated with silver bars, they're coming largely from Switzerland, and with Pam Swiss and Valcambi and others, they weren't imported very much. And so the premiums are higher on them than I like. Maybe 1 ounce rounds, those come from domestic refiners here, would be the next best. Or maybe even there are some coins like the 2026 Silver Kangaroo that we have in stock, or some of the other coins that are not American Eagles, but are of the other 6 major mints, the Krugerrands, the Britannias, the Philharmonics. They're right there. And because the bar market is inflated, I skip it. So it would either be junk silver, 1 ounce rounds, or coins from probably not even the Maple Leaf, which is getting inflated again. It would be South Africa, Australia, UK. To me, would probably be the 3 that would stick out as being a good value right now.
What impact does China restricting exports of silver mean for us and the LBMA?
Well, I think it means a lot for the LBMA. It because of this, and because the move to classify silver as a resource of national interest, that's China.
The reclassification of silver as a strategic metal is more than just a label. It's a paradigm shift. It's the moment when policymakers and investors alike finally realize that silver isn't a toy market for speculators. It's a foundational pillar of modern civilization. Without it, the entire green energy transition grinds to a halt. So what does that mean for investors? It means we've officially entered a new phase, the geopoliticization of silver. And once a commodity becomes political, its price stops being determined by markets alone. It becomes a matter of state. We've already seen this playbook with oil. For a century, oil dictated geopolitics. Wars were fought over it. Alliances were built around it. Now, as the world shifts to electrification, silver and copper are stepping into that role. Whoever controls them will control the energy future. Let's talk about China for a moment. China refines the majority of the world's silver. It also produces the vast majority of the world's solar panels, electric vehicle batteries, and semiconductor components. By imposing export controls and requiring government licenses for silver shipments, They're effectively nationalizing the silver trade. That's a shot across the bow for the West. It says, we control the choke point. Meanwhile, the US is scrambling to catch up. The inclusion of silver on the critical minerals list means Washington can now treat it like lithium or uranium, stockpiling it, subsidizing domestic production, even restricting exports. Once that starts, the free market in silver will fragment. We'll have regionalized pricing, domestic priority policies, and chronic shortages in countries that don't have refining capacity. That's when you'll see the premiums go wild. The $2 premium on an ounce of silver today could easily become $10, $15, even $25. And that's before the base price itself rises. Now let's zoom back into the markets. Silver's rally this year wasn't some random anomaly. It was the inevitable outcome of decades of suppressed prices meeting real-world scarcity. Up 65 to 70% in a year, that's not noise. That's the market beginning to wake up. Sure, we had a sharp correction after that 40% run in just 2 months. That's normal. Markets breathe in and out. What's not normal is when banks and hedge funds use billions in paper contracts to create artificial selling pressure that far exceeds real supply. When you see days where 1.2 billion ounces trade on COMEX, nearly 1.5 times annual global production, you're not watching a market, you're watching a control mechanism, but even that mechanism is cracking. Every time these paper smashes happen, fewer and fewer investors are fooled. Instead of selling, people are buying the dips dealers are being cleaned out. Mints can't keep up, and yet the paper price gets hammered for a few days, and the headlines scream, "Silver crash." It's theater, I'll tell you what's really happening. The big players, the ones who used to short silver with impunity, are quietly trying to unwind their positions before the physical squeeze becomes catastrophic. They're getting trapped. Remember, this is a market that's rehypothecated to the moon. For every physical ounce, there may be 100 paper ounces promised to different owners. As long as nobody asks for delivery, the illusion holds. But the moment large industrial users or ETFs start demanding physical settlement, it all comes undone. And that's coming. The world's appetite for physical silver is growing faster than supply chains can handle. Solar demand is exploding. Electric vehicle production is accelerating. AI data centers are sucking up electricity like never before. And every one of them needs silver for efficient circuitry. Meanwhile, mining isn't keeping up, grades are declining, costs are rising, and most silver still comes as a byproduct of base metal mining. That means unless copper and zinc production skyrockets, which it won't, silver output can't grow meaningfully. We're trapped in a structural deficit. That's why I've been saying for years that silver's price suppression will eventually fail under its own weight. When it does, the revaluation will be violent. We're not talking about a $10 move. We're talking about a repricing event, a reset. At triple-digit silver, this entire industry changes. Coin shops would need millions in inventory capital just to stay afloat. Dealers would consolidate further. Insurance costs would skyrocket. Even shipping logistics would break down. You can't move a $50,000 monster box through the mail system the same way you move a $15,000 one. And that's why the time to position is now, not after the world wakes up. Because once it does, physical supply will vanish overnight. We're already seeing it in small ways. Investors in Asia are reporting months-long wait times for large orders. European mints are backlogged. Even here in the US, premiums have begun creeping higher again, quietly but steadily. The beauty of silver is that it's still affordable to the average person, for now. That's what makes it such a powerful hedge. You can participate meaningfully without needing millions. But that window is closing. When silver was $20, people said, "I'll buy when it hits $15. When it was $30, they said, "I'll wait until it drops back to $25. Then it hit $50 and they said, "It's too high." That's the psychology of missed opportunity. It's the same cycle that repeats in every bull market. Doubt, disbelief, FOMO, euphoria. We're somewhere between disbelief and FOMO right now, and I'll tell you what's going to happen next. When silver pushes past $60, the media will finally start paying attention. CNBC will run segments with analysts who suddenly discover silver. Retail investors will pile in late, chasing momentum. By that point, physical premiums will explode, and the paper market will be in chaos. That's when the big re-rating happens. That's when silver goes from being a commodity to a strategic asset class. The irony, of course, is that central banks, who hold mountains of gold, hold almost no silver that's going to change. As silver's strategic importance becomes undeniable, governments will begin to accumulate it just like they do gold. They'll justify it under the guise of energy security or supply chain resilience. But the effect will be the same: less metal available to the open market. So when people ask me, Andy, do you really think triple-digit silver is realistic? My answer is always the same: no, it's inevitable. The fundamentals demand it, the geopolitics demand it, and now the policy shifts demand it. This isn't a normal bull market. This is a repricing of reality itself. So as we sit here with silver consolidating around $50, don't get distracted by the noise. Focus on the trend. Focus on the fact that silver has been redefined by governments, by industries, by physics itself as the most strategic element on Earth. Because when the next leg of this move begins, it won't be linear. It'll be explosive. And those who are positioned before it happens won't just be investors. They'll be participants in one of the most dramatic monetary resets in modern history.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.